It's a beginning of a new week altogether, and that's how we begin it here on Business Focus here on TV3. My name is Alfred Okansi, and for those of you already reacting to the projections of a possible increase in fuel prices, what I can tell you is that the BDCs, that's the bulk oil distribution companies, have increased the prices they sell to the OMCs, that's the oil marketing companies. So all other things being equal, that increase in fuel prices, you should be expecting it in a moment from now. We're going to get into that very shortly as we go on this show. Also, the Standard & Poor's ratings of Ghana from B- to B has attracted some reactions from you out there. Kojo Ponkroma, who's a Minister of Information designate, will be joining us as we have a conversation on this, what that really means to the ordinary Ghanaian, to you out there watching us. Well, the currency is on our lips tonight here on Business Focus. We go into the spare parts hub of Bosoka, and they've threatened to increase spare parts prices if nothing is done about the cedi-dollar relationship. All these and more tonight here on Business Focus. Stay with us. Let's get into the summaries of the news that made headlines in the world of business. All right, welcome back to Business Focus here on TV3. Now, for some of you who have visited some of the fuel stations, from what we understand, have already started increasing their prices of petroleum products. I've been joined in studio by the Executive Director of the Institute of Energy Security, Sanomo Asechi, and they actually made these projections that there's going to be an increase in petrol, diesel, and gasoline and other products as well. And he joins me in studio for a discussion on this. Thank you so much for your time. It's great to have you. We always, for the past 2-3 months, you don't come in with very good news when it comes to fuel price increases, you know, because now the projections that you've put out there is happening, because from our own checks, BDCs were selling diesel to OMCs at 3 cedis 10 pesos, but now are selling it for 3 cedis 24 pesos, translating about 4.5% increase. And then also for petrol, the BDCs were previously selling to OMCs at 2 cedis 95 pesos. But currently, this morning, from our checks, they are selling to OMCs at 3 cedis 12 pesos, representing 5.7% increase. What exactly did you consider in making these projections, which we're seeing now?
Good evening, Mr. Okansi, and good evening to your viewers as well. We wish that we could bring good news and good tidings to Ghanaians, especially when we have challenges in our own economic setup. What IES does is we look at the variables that drive fuel prices. And you understand very well that almost every fuel we buy today is imported because Temoyo Refinery is not working.
What's the problem with the Temoyo Refinery? I'm sorry to interrupt you on this, but I know that the IES has done some work on the state of Temoyo Refinery now. Because the last time I checked, I spoke to the CEO. He made the point that they're having a turnaround. They're posting figures, opposing the idea of even turning it into a tank farm. So what is the problem?
Temoyo Refinery as a plant in itself is healthy. Every maintenance that needs to be done has been done because they undertook a turnaround maintenance. So the plant is fit. Staff to work. There's the engineers and the technicians and all that. They are competent and they are good to go. Temoyo Refinery's problem is getting crude oil to work with.
But we're a net exporter of crude, aren't we? Am I wrong on that?
You aren't wrong, but you know that we can't dole out the crude oil from our fields to Temoyo Refinery. They need to buy it.
True.
After all, it's an international market. And so you don't treat it as a domestic one where you take your crude and go and give it to toll. They need to prove that they have the ability to refine it and make money. And so they should be able to source for this.
In the past, that they have defended the fact that they have the capacity to refine the crude from the West Cape 3 point. In fact, they say they refine much more dirtier crude from Nigeria. And this, the sweet light crude that we produce here, they say they have the capacity to refine it. So what is the problem?
Of course.
How do we have a refinery in Ghana when we're talking like a Nigerian situation? They don't even have a refinery.
It's quite unfortunate, but Temoyo Refinery have refined the local crude before. Just about a few months ago, they sourced for this crude from AOT somewhere later part of December 2016 and early 2017. That's when they got this 1 million barrels. And they have refined it. Their say was good. They had even more of ATK. And ATK is a premium product. It sells higher than that of petrol on the international markets. So they have the capacity to do it all right. But then it is not just having the competent staff and the good machine that does it. Administratively, how do you do your things? Right. And I've kept saying that if you go to a refinery in India called Jamnagar, it's Reliance. They refine 1 million barrels a day, and the staff capacity is less than 1,400. Temoyo Refinery refines 45,000 barrels a day if they are working full. Today they are doing 28,000 barrels per day, and their staff strength is more than 700. It builds up the costs of production. And so if you want to do a tolling arrangement with them, let's say I want to bring in my crude oil, and BP, AOT, Trafigura, refine it for me at a fee. The least price Temoyo Refinery will charge to break even is our $4.5 dollar per barrel. On the international scale, nobody will pay more than $3.5 per barrel.
So that is also a factor.
So production costs is important. Administrative costs is important in all this. Okay, and so we expect refinery that they should be able to reduce their costs of production, and they will make good.
Fantastic. I mean, I just had you dwell on it a bit because you mentioned that. But per your own projections last week, which is materializing now, you indicated some factors that is underlining the reasons why we're going to experience an increase. 5 cedis to a liter. I mean, there seems to be a relationship between how the cedi is running against the dollar and the liter of petrol now. You see what viewers see on their screens now is the factors influencing the fuel price rise as predicted by the Institute of Energy Security. So Brent crude price is up by 6.2%. Finished products prices, gasoline 1.6%, 1.64% increase, and then gas oil 5.01% increase. So, and then if you see the next slide as well, you have it there that the cedi depreciated by over 3% against the dollar within this period. And these are some of the factors that, according to the Institute of Energy Security, has given reason for us all to have this increase in the prices of petroleum products. So this is just a few of the factors you put out. How does all of this feed into the increase that we are experiencing now?
Well, I was explaining that we import these products, and BDC that good work for us,
right,
because refinery is not working. Boss is also not importing. Quite unfortunate. And so BDC is bringing this product, and because they source it from the international markets, they pay based on dollar rate. And when they buy this product and come and sell to OMCs, which ends at the pump, we collect this in cedis. And then when they are done, they need to go and buy the product again. So they need to change the cedis into dollar and then go and buy the product again. And so if you see the cedi depreciating on your own local front, it does suggest that the BDCs will need more cedis the next time to go and buy the same metric ton of products. So that's where we have the challenge. And if you look from 2017 December, we had the local petrol price being 4.6 per liter. The dollar was 4.41. No, it was 4.46 per liter, and the dollar was 4.41 to the cedi. Then in mid-year, let's say May, we have gasoline going for 4.57 Ghana cedis per liter.
Yes.
Then we had the dollar to the cedi being 4.56.
Thereabout. Yes.
Then you come to this month. The last window was selling gasoline for 4.94. The cedi to the dollar was 4.95. So today we've seen a trend that $1 is equal to 1 liter, and it keep on going. And so when you are getting more of a weaker cedi, then you know there's a problem. So it's a very key determinant.
That is the strength of the currency.
The strength of the currency.
So long as the currency depreciates against the dollar, we're going to have to, or we're going to see an impact on the prices of petroleum products on the market, because we are still importing finished products.
Exactly. And just like any importer, be it Aboso, cans pepper dealer, or tomato importer, where the cedi suffers, it means that you have to get more cedis to buy the same dollar, and then your cost of production or sourcing for this product goes up. Then you have to transfer it to the next buyer or the off-taker. And so BDCs will increase their price to be able to accommodate this depreciation we're talking about to the OMCs. And then the OMC will finally also transfer the cost to the consumer. So this is where we stand today. So unfortunately, gasoline on the international market has also gone up.
Yes.
Between December 2017 and September now, petrol on the international market has gone up by 23%. It's not strange, because just after we've gone through the winter comes summer. Summer fuel or gasoline is very expensive, because in US, where they produce more of these products, you need to switch from a winter grade of fuel to a summer grade, one that is able to dampen the combustion of carbon monoxide and the rest. And so they have to introduce additives at a cost. You also understand that revelers, holiday makers, will travel, and so consumption of these products shows up. And in every economy where demand is high, definite price will go up. Another unfortunate thing is that, unfortunate for the refiners, when it's summer, they have to shut down their plants to do maintenance. So when they shut down, it squeezes supply. Now demand has gone up, supply is squeezed, and so the price of the products will go up. That's what happens. And so if we understand this very landscape well, we'll know that by summer prices will be going up, and therefore, where is our strategic fuel stock, and how do we manage it? How do we buy a product as a country? And do we have to hedge it, or what? Do we need to support the BDCs in even hedging this product, and also hedging the cedi against the dollar? All these things have to come to play to be able to cushion us as we move forward.
Certainly the point, because from what we've gotten on the market, our own checks on the market this morning indicates that the BDCs were selling diesel to OMCs at 3 cedis 10 pesos, but currently, as of this morning, it has increased to 3 cedis 24 pesos. That's about 4.5% increase. And then you expect that the OMCs will definitely pass it on to the consumer, that is you and I. And for petrol, the BDCs are now selling it to the OMCs at 3 cedis 12 pesos, as against the 2 cedis 95 pesos previously. Translation about 5.7% increase. So that's what you should be expecting. I'm going to go for this quick break. When I come back, I'll find out from my guest what should be done. And then we'll go on to the Abossey Okai spare parts dealers who are raising concerns about the strength of the cedi. Kojo Oppong-Nkrumah is going to be joining us very shortly to have a conversation on this. Stay with us here on Business Focus. Welcome back to Business Focus here on TV3. I'm going to take in 30 seconds. So what do we do to deal with this situation very finally?
I think we can look at the special petroleum tax. Government has been bold to reduce it from 17.5 to 15 and then 13. Right. Today is the first component now, about 46 pesos on every liter of product we buy. And we have made an argument that that very element of tax on the fuel price is needless. Right. And we have made a call for it to be scrapped. Right. And so we think that this time around we need more than boldness. We need sincerity to take away completely the special petroleum tax. Fantastic.
Sincerity. I hope that the Information Minister Designate, who is going to be joining us very shortly via Skype, would respond to that sincerity. But before we get to him, Chairman of the Ghana Spare Parts Association, that's in Abossey Okai, Clement Boateng, has blamed the rapid depreciation of the cedi on the repatriation of profits by, in his view, multinational companies. Well, he wants government to compel multinationals to retain at least 30% of their profits to reduce the pressure on the dollar. And they say if it continues, they will have no option than to increase the prices of spare parts. Let's take a listen to them.
People are complaining that already prices are high, and we are also being complaining that we don't buy anything. So we are still selling at the same prices, even though it is affecting our profit margin.
So the normal reaction would have been to increase prices, but since you are unable to increase prices because the economy is generally hard, you say, and sales are low, so your profit margin is the one that is hit.
Yes. Yeah, that is exactly so. But one thing is, if the cedi continues to fall further, we wouldn't have any option than to, adjust our prices more, because as you know, no businessman is a Father Christmas. We just pass it on to the consumer. In the media budget review, when the finance minister came to Guta, there were a number of suggestions that we put before him that we think if they go by that suggestion, it will make the cedi a bit stable. And some of the suggestions are one, the multinationals that we have in this country, like the Unilever, like the Telecos, at the end of the year, they make a repatriation of 100% of their profits back to their home.
Well, so the man you saw there is the president of the Abossey Okai Spare Parts Dealers Association. Kojo Oppong-Nkrumah is Minister of Information Designate, Member of Parliament for the Ofosu Edegbe constituency. He's a member of the Finance Committee of Parliament as well. He joins me on Skype. Honorable, I thank you very much. Good evening to you if you can hear me.
Good evening, Alfred, and thanks for having me.
Fantastic. Now, I'm just going to have you respond to the Abossey Okai Spare Parts dealer, the president of that union. They say they are not Father Christmas. If the cedi continues to fall, they would have no option than to increase the prices of spare parts for us to buy. What's your response to him?
I think my response is that government, in the first place, has done a lot to ensure that with the kind of global currency tumbles that are taking place because of the strengthening of the US dollar, the Ghana cedi will still be able to hold its own. And indeed, the Ghana cedi has consequently performed, very well as compared to other currencies. If you compare it to the peso of Argentina, to the lira of Turkey, to the rand of South Africa, to the rupee of India, but in the face of the pressures from the US. And so government will continue with efforts to ensure that the pressure on the cedi is reduced, but government will also continue to encourage all actors to help us do the education and the explanation so that those who would have panicked and added extra pressure to what is already existent are dissuaded from doing so.
So you mentioned that, for example, when you compare the cedi's performance to the Argentina currency, Turkey, we're doing well. But then again, see, if we compare ourselves with dwarfs, we always think we're tall, you know. And so there are many who think that we're getting comfortable with such comparisons of such countries that are certainly not doing well. But when we refer to them and say the city is doing well, then, you know, we tend to be, you know, more of tickling ourselves and laughing at the same time.
Alfred, what makes you think that the Indian economy is a dwarf economy? Or that the South African economy is a dwarf economy? I think that sometimes for all of us in this space, we also should be a bit calm when we are doing these analysis and asking these questions. The Indian economy is not a dwarf economy. The South African economy is not a dwarf economy. The European economy is not a dwarf economy. I think what we are saying is that ordinarily we would prefer that, having corrected the fundamentals, the currency will be performing like it did last year. Unfortunately, beyond what we have done, there has been a major incident on the global capital markets. And we draw attention to the fact that that particular incident, and if you compare the rates that are happening to other currencies, it shows you the extent of the problem. And it shows you how well we have held on in spite of the extent of the problem. It's not a comparison to dwarf economies. And I think that, you know, the Ghanaian economy perhaps should not be spoken of in that kind. What is important is that government is embarking on a major exercise which is aimed at reducing the short-term pressure that has come currently. And that major exercise is ensuring that our stock of dollar today, which we argue and we have demonstrated has significantly improved, is made available to meet the demand. The reason, and you see, sometimes I hear people say the ordinary man doesn't care, so let's reduce the conversation to that of the ordinary man. No, we have to explain to the ordinary man and bring him to that level of general understanding. What has happened is that we have enough reserves currently, we are earning enough foreign exchange currently, but the demand for foreign exchange has gone up because of the desire to expatriate hard currency. One of your persons from Abossey kind of alluded to that. Now, that demand for expatriation of currency has to be met with adequate supply so that the price doesn't go up. And that's what the central bank is doing. What remains now is for you and I, instead of, with great respect to you, making comments that this is to understand, explain to everybody else to understand, and also explain so that we take away the unnecessary panic that could set in if we keep on that track.
Now, so what would be your response to, for example, some other economists who raise concerns about the decision to pump in more dollars to sustain what they describe as a weak city? So why do we have to go on that trajectory when it is not a sustainable intervention we want to make?
So again, for anybody who follows these matters, when somebody says that the Bank of Ghana is pumping in cedi, what does it mean? What it means is that the Bank of Ghana is releasing hard currency to meet the demand. If, for example, on a weekly basis, people demand $100 million, and now because of an increased demand, people are demanding 120. If you keep supplying 100 million, what will end up happening is that because there is increased demand, price will begin to go up. So you must bring some equilibrium by ensuring that there is enough supply to meet the demand. And what we are saying is that there is already enough reserve, as has been demonstrated. And what the central bank is now doing is to make that reserve available. What we should not be doing is kicking up the panic that, oh my gosh, something extraordinary is happening, and therefore everybody needs to compare their currency to dollar. Because the moment you do that, and the moment you don't nuance the reportage, what will end up in and then now supply needs to be shut up. So to those who say that that is not sustainable, if we were at a time where we didn't have enough reserves, or we were at a time where we were not earning enough dollar, and remember now our dollar reserve has gone over 7 billion. Remember now that our balance of trade and balance of payments has gone into positive. And so if we are now at this stage, then ensuring that demand meets supply and therefore cutting out the tendency to increase price cannot be an unsustainable thing, because we are earning and we are holding enough reserves.
Fantastic.
The important thing to do is for us to continue to communicate and explain, for those who understand, to communicate and to explain so that we do not cause unnecessary panic in the system.
Fantastic. So, and that's the explanation that I needed from you, which you have given in response to this position that some have actually espoused as well. Now, the Standard & Poor's ratings has also generated some reaction, and indeed, from B- to B is good. But then we have been to B+ before. So the question is, how do we sustain this positive indications that we're seeing? I think that's really supposed to be the most important concern here.
And I think it's a fair concern. If you would recall, the last time Standard & Poor's put us on B+, was 2008. The last time Standard & Poor's put us on B+ was 2008. Since then, we have come down gradually. In the last administration's tenure, from B+, we came down gradually to B-. In the last 1.5 years, the Akufo-Addo administration has worked strenuously to fix the fundamentals. And that is why Standard & Poor's says that when they examine, they can put us back up to B. We are not even back up to B+ where President Kufuor left us. We have money to take us back up to B. We still have some more work to do to take us even up to B+. That is the first step. And then secondly, to ensure that the dividends that come from an upgrade of this nature, which means increased foreign direct investment, which will augment what we are doing to bring jobs, which will augment what we are doing to strengthen the currency, which will augment what we are doing to bring in hard inflows, actually take place. And that is, I think, the next step of the job that we are doing. An economy that has literally been ground to a halt over an 8-year period will not be fixed in 1.5 years. But even 1.5 years, we have been able to get the fundamentals right and bring an upgrade. I think what we now need to do is to focus on what do we do to maintain it. And to maintain it, government is going to keep a strong eye on the monetary policy continuance, inflation targeting, and the kind of exercises that we're embarking on to ensure that we keep supply of, currency in circulation at the levels where it ought to be. We have to continue with the exercise of fiscal consolidation and fiscal discipline to ensure that, A, we continue to increase our domestic resource mobilization, B, we continue to discipline ourselves on the expenditure side so that in the end, our deficit doesn't again kick out of gear as we have seen happen in times past. And if what we are seeing under President Akufo-Addo, Dr. Bawumia Kenneth-Boyata is anything to go by, fiscal discipline is something that we are committed to. We need to go through these teething pains to get on a level playing field. And then hopefully when we exit the IMF program by December this year, we have discretionary space to spend not just on some of the things that the fund says we should spend on, but also on our priorities as well.
We're grateful that you made some time to respond to these. And I'm sure that the many questions that we had, which I have presented to you on behalf of our viewers who sent to us, we've got some answers. We will speak some time again, Kojo.
Thank you. Thank you for your time.
Great. Kojo Oppong-Nkrumah is Information Minister Designate to us via Skype. I'm going to go for this quick break. When I come back, the show continues. Stay with us. Welcome back to Business Focus here on TV3. My name is Alfred Kansi. Winslow Sakifio is with us in studio. He's the head of capital markets at First Bank. It's an investment firm. He joins us to have some analysis of the commodities, the stocks, and the currency. Winslow, thank you very much for time, and it's always good to have you. Now, let's start off with the stock market. I'm concerned about especially the banking stocks. How is it looking when you call the three strong ones in there?
Unfortunately, the banking stocks are not doing well, especially from last 2 weeks and last week. And it looks like we would have that for the next few weeks. Investors are sort of cashing out. The market, in general, is not doing so well. So there's a bit of exit by a lot of investors, and it looks like it's really taking the market down. Fortunately for us, we have MTN coming in that is providing some cushion for the market. So we had a lot of losers last week, but because of the gain by MTN, we are seeing the market still holding up. And if the interest in MTN is continuous as we want it to, it would prop the market up till the recovery is seen going forward.
What does this fall in the stocks of the banks on the stock exchange mean? What could have led to this?
For most of the banks, the areas we are seeing weaknesses are the smaller banks, those that haven't met the minimum requirement or don't have the size to take advantage of what would happen if other banks don't meet the minimum requirement. So we are seeing the likes of GCB, EcoBank, Standard Chartered having a significant gain. But as the losses start spreading, it looks like it's affected the big banks too. And that is what we are seeing currently. You know, investors, when they are taking money out of the market, most of them don't restrict it to only the problem areas.
Absolutely.
They take it to even the good ones on the market. And
Because, you know, the rate of doubt it spreads. I mean, it's to a sector and not just, so it's a financial sector itself.
Yes.
Or the banking space that is experiencing this.
Yes, and the banking space holds majority of the stocks on the exchange. They have the highest weight. And, you know, there's a lot of talk about the banking sector, minimum requirements, banks that are merging, banks that are collapsing. And it sent a lot of very negative sentiment to investors. And they are currently reacting to it. But the problem is they can't also get out of the market very fast because our market is not that deep.
Sure.
So there's some sort of uneasiness on the part of investors.
But there's a possibility it's going to get better.
It
At least
would.
after all of this is said and done, after maybe December.
I would say it will be after first quarter next year
First quarter
because
next year.
this problem will likely eat into the first quarter.
Absolutely. I know there's a 90-day window, you know, for the banks eventually and all of that. I think there's a process we'll have to go through. But then let's go into the commodities as well, because we just spoke about crude oil, and from what we understand, we're supposed to be buying fuel now for almost 5 cedis.
Yes, the
Why?
crude story doesn't look too good. On the international market, we are seeing the prices picking up because demand is expected to pick up too. I know US pulled out of the Iran deal, so they are slapping new sanctions on Iran, and Iran is a significant producer, so we'll see supply shortfalls. And given the demand that we expect in the fourth quarter and the first quarter of next year, we'll see oil prices picking up, which would not be good for us because we'll pay more for the fuel we buy at the pump.
Oh, but what if price of crude oil is going up on the world market? What this means is that Ghana as a country is gaining because we're a net exporter of crude.
Yes.
But the ordinary Ghanaian,
Wouldn't gain because we also use
Exactly.
crude here in Ghana.
maybe for cocoa, I don't think it's also the same.
Yes, cocoa, the prices are going down because we expect bumper harvest from Cote d'Ivoire. And that is pushing the prices down, which is not good for the Ghanaian economy because we also export cocoa.
Fantastic. Winslow, as always, it's a great joy talking to you, except that you don't bring good news sometimes, unfortunately. But thank you. Winslow Sakifio is head of capital markets at First Bank Investment Firm, always helping us every other Monday for us to understand how the week will look like on the stock market. But on behalf of the rest of the team, I want to say thank you very much for staying with us here on Business Focus. Still stay with us on TV3 as we get into News 360. My name is Alfred Okanse. Good evening.